Hello world, welcome to Harness Money. I am Colin. There's one growth stock that I have had in my portfolio in the past, and I believe is a growth stock that everyone should hold for the rest of their life. This is really a traditional stock that didn't move very much, but I think has great long-term potential, and I just think has really turned around and become a growth story. Let me get into some of the numbers. Right now, it's priced at $159 per share. It has a market cap of $270 billion. It does not pay a dividend, but I think that is because of the Rona virus that happened in 2020. I think it will get back to paying a dividend at some point in the future when really that revenues have leveled off and they're more of a cash flow business. But right now, this business is Disney. Disney has had a lot of chatter lately because of the numbers that they are putting up, because the numbers are looking good for this business. Not long ago, they were shutting down parks. They were ramping up investment into Disney Plus. Things were not looking so great for Disney. They were struggling with a lot of just headwinds that were coming after them. But all signs are pointing to a great recovery for this business. I would say in the next 1 year at least, and then really the next 5 years to 10 years are looking pretty good for this business. They're really executing on the Disney Plus strategy. They really pivoted from being a cable package provider to putting all of their eggs into this subscription service. Subscription businesses are becoming more and more and more popular. I feel like because of the success of a business like Adobe, Microsoft, and now Disney, all of these companies are going towards a subscription service model business, and it's working for Disney. They have 130 million subscribers to Disney Plus. That is pretty good news for a business, for a line of revenue that really wasn't even available, more than 2 years ago. So it's looking good for this particular business that it will work out, that they eventually will hit their target numbers, and that this will be a great line of revenue for Disney. Now, the thing about subscription businesses is a lot of times they work for software because software is necessary for businesses. So if you have a payroll software subscription, if you are signing up to do maybe cybersecurity, you're going to need that on an ongoing basis. The hard part about streaming is that it's really based on the content. If your content kind of lags, as in you don't have really popular or viral content, that means that the user could drop your service. But in the case of Disney, they have that built-in aspect of children, of new children being born, and beloved characters in the Disney universe like Frozen and just all different Pixar lines that they have, like Toy Story, and then you have Marvel. They really this universe of products and services that they created that only existed within the Disney empire. And now it's just going to go online. It's going to go digital. And I think that is going to be the next place that Disney goes, is they're going to create some type of Facebook-esque metaverse where you can go be, Iron Man in the metaverse. You could go be Thor, or what was the Scarlet? You can go be a female superhero character and really have fun and play and live and just breathe this online universe. And you can just spend more and more time in the metaverse. So I don't know. I don't know if Disney is investing more and more into gaming, but I think they should. That should be an area where they really should have, I feel like, gone after that specific segment harder, and mainly like built a gaming studio if they could do that in California, or some type of studio where they could actually create their own games and not license that out or just outsource it, which is pretty much what they've done in the past, is just outsourcing it to other areas. But that could be a future growth for them. They still have tons and tons of cash. They have the ability to borrow in order to create that. But the first step is getting people into the Disney Plus subscription service, which they have done, and it's also looking good. The other front, there's really like three different legs of Disney. There's the Disney Plus, or the, let's say, entertainment, that, and I'm gonna include the movie studios under that umbrella, the entertainment. There's that. There's the parks, and then there is the toys, and basically like all the physical goods that Disney creates. And that's where I think Netflix needs to take note. Reed Hastings has done an incredible job of just growing that user base, but I feel like they haven't really diversified out into other streams of revenue, which I get it. You want to wait till you're a specific size of a business before you start messing with things, before you start experimenting with other models. But I feel like Netflix has now reached that point. They've reached the size of Google or Facebook where they can take moonshots and do crazy things. And when I say crazy, I just mean like they could try and get into physical products. They could try and creating maybe like some type of Netflix YouTube where people like individuals like myself, or just teenagers or whoever, can create their own content. They could get into gaming, which they have dipped their toe into. I think that was a good start. I think they're going to really have to ramp that up and really create engaging games centered around their content, like Squid Game or whatever, Bridgerton or Inventing Anna, Ozark, some of these really tentpole series that they have, and really making that special and making people want to spend time in that specific area. Disney also has a couple other things going for it. They've really put their hands in a lot of different baskets that were smart. They made a lot of smart acquisitions. Bob Iger, one of the most respected CEOs, because he really did, I think, focus on the future and set them up for success. Star Wars, I still think they've got Avatar in the war chest, where they're going to come out swinging for a decade. I think they're going to put out a decade's worth of content with Avatar. They bought Fox, 21st Century Fox, and all that content that went with that. So that's another treasure trove of different characters and storylines that they can pursue that will really keep them going for the next few decades at least. So but they're firing on all cylinders. With the parks are looking up, people are going back out, they're reopening. The attendance, I think, will be good for the next few years, and that'll just feed their whole Disney universe, that people are going to go to the parks, then they're going to watch the movies, then they're going to watch Disney Plus, and it's just going to be an endless loop of content that they can explore. And then that goes into the games, the toys, the physical products that are associated with Disney. Children love to play with toys, and that's a huge aspect of their business. So they're hooking back up with Hasbro to make some of the physical toys. So it's all looking good for this business. The growth aspect is going to be that Disney Plus. That's the easiest thing to hook in new revenue, to bring in new consumers worldwide. That's another benefit of this business, is Disney is already a global brand. They don't have to do any legwork like Netflix did to introduce their content to a new audience. Netflix really had to go into these countries and try and adopt their culture, or try and say, we're here to create content for you, versus Disney already has a lot of those relationships built in. I think China is going to be huge for Disney. They spent so much time, money, and energy developing the Shanghai theme park that's just another great area of growth that they can explore, that they can create. If they can create a lot of great content that the Chinese government approves of, that they can really hook in a lot of customers in the Chinese market. So this is a company that I have had in my portfolio for a while, but I wasn't invested that heavily into it. It was just kind of one of the ones I was holding to keep track of. But I'm really looking at this as a solid growth stock, as the younger, hungrier growth stocks get hit hard, like Netflix, maybe like PayPal, and some of the younger or like smaller ones like Robinhood and The Honest Company and Tattooed Chef. Those are getting beaten down hard. I think Disney is one that is big enough. They have enough revenue already that they're going to be solid and that they're going to continue to grow, and that they can really take advantage of the next few years. If you get in now while the overall market is not doing as well, when the market comes back with a vengeance, and who knows how long that will take. That could take, that could take up to 5 years before the market really comes back in a big way. That if you buy in today, you will really be rewarded for it down the line. And also, the last thing I was going to say is the dividend. Disney cut the dividend because they were struggling so much. They had so much physical business that was hit during 2020 that I think eventually they will start paying that again. They're putting more and more money into content creation to build out Disney Plus. But I think once they get to a certain number of subscribers and hang on to those, whatever that number may be for them internally, I really don't think they've shared that, even though they say like something like 230 million. I think there's a different, maybe a bigger number where they will institute that dividend back to consumers. There's enough areas of revenue that are solid for this business. And then I'm going to say the Goodwill. People love Disney. Disney is about children, about creating happy memories that people are always going to want that. They're always going to want to take their children to Disney World and have this lifelong memory and create that nostalgia that you just can't put a price on that. Other businesses would give everything to have that kind of goodwill in the community, and Disney already has it, and I think they're just going to continue to build on that goodwill that they already have. So thank you for watching this video. I am Colin. This is Harness Money, and remember, make good money choices. Till next time.